So when Meta gets inside of these bigger ranges right here, you see from 299 to 338. If you go back and look at not Meta, but Tesla's history, when it gets in that range, it gets busy and it pushes up really fast. And down here, when it pushes between these levels, it pushes. So you want to look for these wide open gaps in the chart. And not a gap, but basically a lot of space between the lines, your support and resistance, to show you when the stock can really move aggressively. Like right here, it pushed up from 413 all the way to 470. Then it dropped all the way down from 470 back down to 413. And it kept doing the same thing, right? And so then it broke under that level. But once it got back above this and back in this A plus trade range, it went from 424 all the way back up to 470. Even though it went a little higher, but it got back in that range, and you can see that it can move this whole full A plus trade range really fast. And these are daily candles, so it's not taking a long time. That means that once it breaks over into this range and it shows strength and your chart aligns over confirmation, you can move like $50 really fast within what's that? Within like the same couple of weeks, like 2 weeks, 3 weeks, this thing can take off and be up $50, right? And so this is what A plus trade ranges look like. You want to use your support and resistance lines to find them. And you also want to make sure that your order blocks are agreeing with them, right? So this is what it looks like when you're using, other layers of confirmation. So when you're trading, it's just like when you're taking somebody to court and stuff like that, and they say, "How many witnesses do you have?" Now, if it's just your word against the other person's, then you really can't have a lot of confirmation on what really happened, what's about to happen in that. But if you go into a court and you have four witnesses and they all telling you, okay, yeah, it's he went that way or this right here happened, you have more layers of confirmation. So the way that I trade is I train people to use layers of confirmation. And so each one of these things that we talked about already, the support and resistance lines, that's a layer of confirmation that's showing you what's possible, where can we go. Your 200, why it's yellow, it's not red. That's right. So when it's red, we're in a downtrend. But when it's yellow, that means what the stock wants to go up. When your 12 is blue, that means what the stock wants to go up, right? So now we see that we know this is their money. And so we see that right here on the 14th, the people with the money came in and bought Tesla right here. So we know that we have money and they're interested in pushing Tesla up. We also see that the 200 is yellow, which means that the stock is in an uptrend, so it's capable of going up. And then once we flip the 12 to this blue color, that means that the short term trend is also saying the stock wants to go up. And we already see that we're in a range where we don't have many obstacles that can stop it from going up, right? And so if we put this in replay mode, we can see that we would have had a resistant level up there, but that still just gives us a target to get to, right? So we're in the same A plus trade range, but with us having confirmation that the stock wants to go up, with the 200 being yellow, we're in an overall bullish trend. The 12 is blue, so it is also bullish. We're in this range where it's known to go from 411 all the way up to 470. And so now that we have agreement with this witness, the 200, the 12 is a witness, the range is a witness, right? So we got all these witnesses saying, okay, this is the range where Tesla likes to go up. We have historical witness. We see that it's happened before, right? And so now we can know that it's a good trade to get in, right? And so now let's go. I'm going to go show you our early entry confirmation system. This will help us get into trades early. And I'm going to show you if we miss that entry, how do we get in with the momentum push, okay? So in the system I teach, we try to do things with our confirmation system. We try to do them and have different layers of confirmation within the chart. All right, so let me add this indicator back right quick. So in this confirmation system that I use, this moving average right here with the lime green line right here, this moving average is our fastest moving average. So this moving average, just like the 12 and just like the 200, so all these are just moving averages, right? And let me turn these clouds off. I don't want to confuse you all with these clouds right quick. All right, so all these lines that's moving, these are just moving averages, okay? And we already know the purpose of them is to show us the trend, but they also act as dynamic support and resistance. But when we have this lime green line right here, this is the fastest. This is the moving average that I created, and it has a signal line built in with it. So all this does is shows it just tells us when to when the momentum is about to push the stock up, right? Or when momentum is about to push the stock down. So with this moving average, all we want to see is a candle open and close above this lime green line, and no part of the candle touching, not the wick or the body touching this lime green line right here. And then you want to see a candle close while this lime green line is crossed above for when you want to get into a stock, and if you think the stock is going up, you want to see this lime green line cross over this red line, and you want to see the candle close. Once that happens, then the stock is ready. It's signaling that the stock is ready to reverse from this downtrend and push up in the direction that you're trying to go in. So we want to see this A plus trade range. Once we see the candle open and close above this level, above this lime green line, that's signaling to us that the stock is ready to push up. The second thing that we see is that once we open and close a candle above the 12, you see how it flipped blue? That's our second layer of the confirmation that the trend is ready to continue, right? Up higher. The third layer of that confirmation, say you didn't get in right here after you got this candle that signaled the crossover. And so you missed getting in at 414, right? Which is the early entry. And the price got above the 12 and you didn't get in here because maybe you just didn't see the trade. But if you missed all those, you still have an opportunity to get in within this system at the third layer, which is the momentum breakout. So this trend line, this diagonal line coming down right here is a trend line. And so what we look for this confirmation is three things to happen. We want to be coming out of a green zone. We want a green zone under us, right? Under the trend lines. We want our 200 to be yellow. We want this 12 to be blue, because all three of these means that the trend is in the uptrend, and you also have volume pushing you up, right? And then after that, we want to see a candle on the other side of this trend line doing the same thing that we like to see the candles do, right? We want to see it open and close above this trend line, this diagonal line right here with the dashes in it. You want to see the candle, the wick of the candle and the body open and close above this trend line and this blue line without touching the blue line or the trend line. And that signals that the stock is ready to push up higher. So even though it came back, so two things that happened after this momentum breakout, because we're pushing into a bearish order block. So if you get into a momentum trade, what you want to see is empty space up here. If you don't see empty space up here, you want to wait for a pullback. So like just like it pulled back here, it then you want to see it push through this. So in this particular example right here, because we have an obstacle in our way, which is a massive obstacle, the same obstacle that took Tesla down from right here, I wouldn't take this trade only because we're breaking out into a bearish order block. So, and I'll show you the difference between that. Like right here, you see how we have this resistance right here. When you take a level 3 confirmation, so we got our early entry right here, but at our level 3, we're breaking out into a resistant level. So anytime you see that, the price will push up, hit the resistance, and then pull back. Or if you get a red candle on your breakout candle, it's going to pull back and retest the trend line. So when you're taking these type of trades with a trend line break, what you want to see is a clear play. You want to see kind of an A plus trade set up above you, before you take the momentum trades. And so if we go into what happened here, so we know that Tesla eventually broke past this because um, we've been trading in the market. So it broke into the resistance area. It pulled back, but I wouldn't have entered this particular trade because of that red order block. We already know that they're selling Tesla in that zone. So it doesn't make sense for me to buy um, upside calls or I try to think the price is going to go up if that zone is in the way. So on a trade like that, what I normally do is I tell people, hey, wait till Tesla closes a candle above that red resistance level. And then once it does that, then you can get ready to jump into calls or something like that to push the play up. So we see it, this candle closed above it, and then it pushed up from there, right? So let's go over another early entry one. So let's go to a lower time frame and let's look at a recent breakout or breakdown. Really, the market's been dropping, right? So let's look at SPY, for example. If we look at these two examples right here, for example, we have SPY breaking out right here. So we have our early entry, right?